Hello and welcome to another little bit of Satoshi's news. Just had to go over another article that somebody sent me today, so go over that now. Today's date is Wednesday the 9th of April 2025. The year BSV comes alive. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Let's get into it.
See Satoshi like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, them transactions flying free. Just wait for the Terra node, you'll surely see.
Alright, here we go. So somebody just sent me this through. Check this out. March 25th this was on. Says SEC staff issue statement on proof of work crypto mining activities. Key takeaways: the staff of the SEC's Division of Corporate Finance issued a statement clarifying that mining crypto assets on proof of work networks does not involve the offer and sale of securities and does not require registration with the SEC. Well, again, they're missing the chain of digital signatures, the unbounded scale, and fixed token supply, because Dogecoin is proof of work, but that's an inflationary supply model. Litecoin doesn't have a commoditized starting point. BTC, Gregcoin, has got its chain of signatures broken. Same with BCH. So it just goes to show you they're clueless. They don't know what's going on. The statement applies only to crypto assets intrinsically linked to the functioning of public permissionless networks and used for participating in consensus mechanisms or maintaining network security. The statement's clarification covers both solo mining and mining pools, emphasizing that these activities do not meet the investment contract criteria under the Howey test, as miners' profits in both these cases are not derived from the efforts of others. The statement does not address staking or proof-of-stake networks, which has been the subject of SEC scrutiny, particularly around delegated staking practices. On Friday, March 21st, 2025, the staff of the Securities and Exchange Commission, Davison of Corporation Finance, the staff, issued a statement clarifying the application of the federal securities law to the mining of crypto assets on proof-of-work networks. The statement solely addresses the mining of crypto assets, covered crypto assets that are, one, intrinsically linked to the programmatic functioning of a public permissionless network and used to and or earn for participating in such network consensus mechanisms or maintaining the technological operation and security of such network. The statement clarifies that the mining of covered crypto assets on proof-of-work networks, that's our protocol mining, does not involve the offer and sale of securities under the Securities Act of 1933 and the Securities Exchange Act of 1934. Participants in protocol mining accordingly do not need to register transactions with the SEC or qualify for any exemptions for registration. Understanding protocol mining and proof-of-work networks, blockchain networks typically use cryptographic and economic mechanisms to verify transactions in crypto assets without traditional financial intermediaries. The operation of each network is governed by a software pool that programmatically enforces the network rules and rewards. A key component to this protocol is the consensus mechanism, which allows a distributed network of unrelated computers and nodes to agree on network data, including transaction records. Proof of work is a consensus mechanism used to validate transactions by rewarding participants, known as miners, who use computers to solve complex mathematical puzzles. The first miner to solve a puzzle validates a batch of transactions and proposes new blocks to the network. In return, miners earn rewards in the form of newly created covered crypto assets. This process secures the network by requiring miners to spend significant computational resources, making it difficult to alter transactions or engage in fraudulent activities. Public permissionless networks allow anyone to participate in the network's operation, including the validation of new transactions to the network in accordance with the network's consensus mechanism. The Bitcoin blockchain is a prominent example of public permissionless proof-of-work networks. Solo miners on networks can also join mining pools where they can combine their computational resources to increase their chances of successfully validating transactions and mining new blocks. Pool operators typically coordinate the miners' resources, maintain hardware and software, and ensure security. Rewards are distributed among pool members based on their contribution, with the pool operator taking a fee for its services. The staff statement. In the statement, the staff clarifies that protocol mining activities on public blockchains do not involve the offer and sale of securities. Accordingly, participants in these activities do not need to register mining transactions with the SEC or fall within an exemption from registration. The staff's view applies to only the following types of protocol mining activities. Self or solo mining. Miners use their own computational resources to mine covered crypto assets. Mining pools. Miners combine resources to increase the chances of mining new blocks, with rewards distributed proportionally. Such rewards are distributed either directly or through a pool operator. The statement notes that covered crypto assets do not fall within any of the financial instruments listed in the definition of security under Section 2A1 of the Securities Act and Section 3A10 of the Exchange Act. Accordingly, the staff applies the investment contract test in SEC versus WJ Howico to determine whether transactions involving covered crypto assets in the context of protocol mining are securities. The Howey test states that an investment contract, and therefore a security, exists when there is an investment of money in a common enterprise with the reasonable expectation of profits derived from the entrepreneurial or managerial efforts of others. Federal courts have clarified that the efforts of others requirement is met when the efforts made by those other than the investors are undeniably significant ones, those essential managerial efforts which affect the failure or success of the enterprise. The statement concludes that solo miner activities do not involve a reasonable expectation of profits derived from the efforts of others. Instead, each miner uses its own computational resources to secure the network and earns rewards issued by the network's software pool. According to the staff, the miner is merely engaging in an administrative or ministerial activity to secure the network, validate transactions, and add new blocks and receive mining rewards. The mining rewards are therefore payments for services provided to the network, not profits derived from the efforts of others. Although a mining pool could be considered a common enterprise, the staff similarly reasoned that the pool does not involve a reasonable expectation of profits derived from the efforts of others. When miners participate in a mining pool, they combine their computational resources with others to increase their chances of successfully mining new blocks. The statement notes that by contributing their computational resources to the pool, miners engage in administrative or ministerial activities to secure the network, validate transactions, and earn rewards. The key points in this analysis is that the pool operator's role is primarily administrative, and any benefits provided by the pool operator are not sufficient to meet the Howey's efforts of others. Requirements of the Howey test: miners rely on their own computational contributions, not on the pool operator's efforts to earn rewards. Conclusion: what's at stake? Oh dear, this is going to be a car crash. The staff's statement on protocol mining is the second statement in the rapid succession regarding the non-security status of certain transactions in crypto assets. It follows the staff's earlier statement regarding meme coins, which were discussed in earlier Newsflash. Crypto industry participants will undoubtedly welcome the statement's clarification regarding pool mining, but will also note that it says nothing about staking or proof-of-stake networks, which are distinct from proof-of-work networks. The SEC has previously entered into settlement orders against entities offering delegated staking, in which participants on a proof-of-stake network delegate their crypto assets to an entity that aggregates and stakes the pooled assets on their behalf, and then returns staking rewards in an agreement proportional to the delegators. In delegated staking, unlike a mining pool, the delegators undertake no further computational efforts beyond delegating their assets to the staker. While the SEC have withdrawn from litigation against the delegated stakers, it has not thus far publicly reversed its position on delegated staking. Industry participants will be looking to see if the SEC reaches a different outcome on delegated staking. The statement will also be closely studied by the sponsors of and authorized participants in various ETH-based exchange-traded products in the United States. None of these exchange-traded products currently undertake staking, although some have sought approval from the SEC to stake the ETH they hold. Ether ETP sponsors may read the statement's observations about solo validations validation activities in the interest and consider the implications for their vehicles. Since the formation of its new crypto task force, the SEC and SEC staff have been active in seeking comments on various crypto-related activities and providing guidance to the industry, including 7 statements since the task force was first formed. More statements and clarifications are likely to follow. All right. Wow, fascinating stuff. Let's get on with this article here from CertiHash Sentinel node that says CertiHash has surpassed 65 million weekly transactions, sets new on-chain performance benchmark. Loving that. 25.6 million in 24 hours. That's with 297,000. Oh, what? Maybe that's 29,743 TPS. Oh, is that 297.43 TPS? I think it should be point rather than a comma there. Yeah. CertiHash Sentinel node verified weekly on-chain transactions. April 1st to the 7th, 2025. Oh, look at that. Tron is up there. What the hell? Pfft, what a joke. Near Protocol, BNB chain, are you kidding me? What the hell? What a joke that is. Tron, blah, 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 blah. Alright, but I mean, this is just purely Sentinel node. So they're saying Sentinel node has actually processed more transactions than Tron. That's really quite funny. In a stunning showcase of blockchain scalability and enterprise-grade utility, CertiHash Sentinel node, powered by BSV blockchain, has shattered records by processing over 65.88 million verified on-chain transactions from April 1st to 7th, 2025. This milestone crowns it the global leader in blockchain traffic for the week and ushers in a new era of real-time practical blockchain applications. Loving that. Even more remarkable, Sentinel node hit a single-day peak of 25.6 million transactions, sustaining an impressive throughput. Here we go, 297.43 transactions per second. These numbers, verified independently via public block explorers, represent genuine user-driven activity, not artificial volume or testnet experiments. This isn't hype; it's a real-world deployment at an industrial scale, said Brian Doherty, co-founder of CertiHash. Sentinel node provides blockchain proves blockchain can underpin cybersecurity and compliance infrastructure, handling millions of logs daily with unmatched transparency and auditability. Developed with IBM and built natively on the BSV blockchain, loving that. CertiHash and Sentinel node is the world's first blockchain integrated cybersecurity monitoring solution. It detects anomalies, logs verified events, and secures tamper-proof records on chain in real time, delivering an unassailable forensic trail of cyber defense. Unlike traditional logging terms, Sentinel node eliminates uncertainty and latency by anchoring log data directly to an unbounded blockchain ledger, ensuring full chain provenance for security events, enabling seamless interoperable data sharing across vendors, teams, and jurisdictions. Why this matters, the blockchain industry has long grappled with performance bottlenecks, speculative use cases, and exaggerated scalability claims. CertiHash turns that narrative on its head, demonstrating that blockchain can tackle mission-critical workloads at volumes once deemed unfeasible on public networks. For context, during the same week, Tron, 59.5 million transactions, Near Protocol, 56, Ethereum 8.7 and Gregcoin 2.4. While these figures are notable, they fade against Sentinel node's output, especially given the stakes. This isn't DeFi churn or gaming clicks, it's cybersecurity data anchored in real time and at scale suited for national infrastructure. The road ahead with Sentinel node now proven in the field, CertiHash is poised to expand into critical infrastructure, supply chain tracking, and regulatory compliance. Meanwhile, the global rollout of Terranode BSV ultra-scalable node software promises to push transactions throughput far beyond today's benchmarks. In a blockchain landscape often fixated on price swings and token hype, CertiHash stands as a powerful reminder for technology's original promise, a foundation for truth, trust, and transformation. Be a part of the future. Be a part of the future of cybersecurity with CertiHash. We're revolutionizing how enterprise data secure data using BSV blockchain, and we need your support to scale our impact. Backed by IBM, and our technology is already protecting critical infrastructure with unmatched transparency and efficiency. Don't miss your chance to invest in a blockchain solution that solves real-world problems, starting at just $100. Join our Web Funder campaign now and help us build a safer, more trusted digital world. Loving that. Loving that. That's something that can really be pushed to work on. That is ace. That is ace. Yeah, loving that. While we're here, I might actually see if I can find this Garlinghouse post about a hidden road. Yeah, look at this. Let's just go through this nonsense. So Brad Garlinghouse posted out on the 8th of April, so this was just yesterday. He said, today Ripple announced the acquisition of Hidden Road for $1.25 billion. One of the largest deals ever in the crypto space. But the price tag isn't what's most important. It's that the deal marks a once-in-a-lifetime opportunity for crypto to access the largest and most trusted traditional markets and vice versa. Prime brokers, along with other key functions in historically managed by banks for the most part, like Hidden Road, have proven themselves as the trusted intermediary for the largest hedge funds, market makers, OTC desks, quant traders and more. Ripple has been a customer of Hidden Road for years, and we know their breadth of expertise firsthand, clearing $3 trillion annually for 300 plus of the top financial institutions globally. This is the capital and activity that will tap into XRP and XRP's ledger bread and butter. Instant, efficient, scalable, and low-cost movement of value. So they've basically had to buy another platform because they couldn't do it themselves. And they've got the 1.25 billion from just dumping XRP on unsuspecting members of the public. That's outrageous. Instead of waiting for 24 hours to settle trades through fiat rails, Hidden Road will be using XRPL for the clearing portion of trades, and most consequently using Ripple USD as collateral across its prime brokerage services, including cross-asset, crypto and traditional instrument trades. With this deal, the backing of Ripple's significant balance sheet, Hidden Road will exponentially expand its capacity to service its pipeline and become the largest non-bank prime broker globally. It's bullshit. Ripple and Hidden Road combined are a generational leap forward, ready to truly bring the world's traditional and decentralized finance together. Bullshit. It's absolute bullshit. Completely centralized. Utterly worthless piece of crap. You know? Be interesting to see whether that BS has had any effect on the price. I doubt it. Saw XRP going down earlier. Let's have a look at this. Oh no, it's popped up, but then the market's actually popped up as well anyway. I think it's all popped up a little bit. Look at that. I just had an uptick today. Look, all of it together, all together now. What an absolute joke this is. Where's BSV? There we go. Oh, look at that. Look at that. So all the others have popped up more, but BSV just a little bit there. Honestly. What a joke. Oh, look, Jasmine's popped up suddenly above BSV, pushing BSV down to 83. And Neo, look at that. Look at that. Suddenly massively green all of a sudden. That's hilarious. Look, 18%. Oh, my God. Oh, my God. Let's see what BTC's doing then. .94%, 24 hours. Oh my goodness me! Look, there's everybody going. Oh my God, the market! Look, market's just pumped up again. Dear oh dear, dear oh dear. But this does. This somebody just posted this. This actually really did make me laugh. Market sentiment. The entire market is fake. The cabal will just simply crash it whenever they want. You know, there's nothing anybody can do about it because they own the Federal Reserve. They can pump it and dump it at will through fiat currency, and that's all they're going to do. So anyway, there we go. We'll leave it there. That's a quick 20-minute show. Hope you enjoyed it. So as ever, if you enjoyed these updates, please ding your donations for your appreciation to either Satoshi at Semi.com, Handcash.io, Rockwallet.me, Simply.cash, Relasia.com or Senti.ch. We'll leave it there. I hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.
The king still has one more move.